Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for January 25th, 2009. AccendoTrader.com, effective video technical analysis trade plans delivered daily. Each time we come together with our video trade plans, we want to prepare ourselves for the next trading day. On the weekends, we come and we want to examine what some of the experts are saying by looking at their blogs. We want to check the sectors to see if there's any movement that we need to be aware of. We always check the indexes and scan for new trades, set alerts for new trades, and by having a trading plan, we have time to release and spend time with our family. So when we look at the week it doesn't look as bad when we look at it from this point of view. Obviously, when we pull up the charts, we'll get a better picture, a visual. But, you know, where all the three major indexes were down for the week. And, you know, it was another week of uncertainty about the strength of the financial sector. We had Microsoft miss and refusing to give guidance. We also had Google miss on revenues. There was some concern about whether or not GE is going to be able to continue with their dividend. And then on the other side, we had, you know, IBM did beat earnings and Apple beat earnings thanks to their iPod sales. So in the end, we saw, you know, some down movement and some up movement. So we had basically a consolidation week from where we met last week. But we'll, again, talk about that in a second. This week, we do have a couple big things. It'll be interesting to see what the FOMC has to say on Wednesday. But also, it's going to be how bad is this fourth quarter GDP going to be? That's probably, you know, that's going to be kind of equivalent to the, you know, the monthly jobs report. So we do have some economic news this week, and obviously we're going to have a lot of earnings this week as we're right into the meat of the earnings. So again, tomorrow we have existing home sales and leading indicators as far as economic data. Before market opening, we have Caterpillar and McDonald's. Afterwards, we have Amgen and a former metal stock that we used to like, Steel Dynamics. But this week, we've got BTU, we got Yahoo, and Yahoo's probably, you know, after all of this merging, they got their new CEO. We got Baker Hughes, Boeing, General Dynamics, CNX, Amazon. So we have some earnings, and this is just a few of what's coming out this week. And there's our same split play that we've been talking about for a month. Before we look at the three major indexes, I want to make sure we take the time to remind everybody that in 2009, we're really going to be using Twitter to get our alerts as a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/AccendoTraders to sign up to get our free alerts. Okay, so as we talked about, we are now basically in earnings week, and when we look at it, this is what the market looked like last week, coming down hard, and we said this was the likely place to bounce. More importantly, this is the likely place to battle out where the market's going to go from here. And so let's look at what happened this week. And you can see that the battle has begun. Now, we still are dealing with the earnings, and, you know, this was the Apple earnings here and the IBM earnings right here. So what we're seeing is the battle of what's going to go on. Every time the market has slipped down below 8,000, the buyers have brought it right back up, Again, we have more news this week. Wednesday and Friday economic. We have earnings every day, but the battle is going on. And of course, we have more news coming out about the stimulus package. Again, we talked about our support level, and again, the buyers are continuing to come in and support the market. So, which way is the market going to go? I don't think anybody really can honestly tell you. The point is that you can see we've got a bottom here. This is S&P 500. If we get below 800, that's not going to be good. Going back up to the Dow, if we get below 8,000 and we close below 8,000, not going to be good. So as we switch to look at the sectors and which ones have caught my eye, first up, we've been talking about agriculture for a couple of weeks. Pot had a good week at Mosaic. There was some earnings in there, and they did okay. What I like about it is as the market is still above the 50, the market's still kind of consolidating. It's fighting, it's struggling. not really the dips that the rest of the market did. So I'd like to see it get above the wicks here. Oil, oil is showing some weakness here, but you can kind of see that if we've got sort of some wicks going on here. So oil needs to break above 700 to make a move. Same thing here with metals. What I like about metals is when you look at these sector charts, most of them are all just kind of downtrends, but you can see, you can make an argument that metals is breaking up. Now I can easily bring this up here and say no, but metals caught my eye, and obviously because of metals' relationship with gold. And here gold is, AM, ABX that we've been talking about all last week, had good weeks. So gold looks like it's ready to break out and make a new high. And the final sector that's catching my eye is internet. And this kind of falls in the same way that you can make an argument that it's breaking up. And we have Amazon earnings this week. Apple did okay. Apple's not really internet. Yahoo has earnings this week. So if it can get above the 50, then internet stocks will definitely be on my list. I want to finish off with the futures. Both of these are looking, the Dow and the ES for the S&P 500. Both of these are in what we would call descending wedges, descending triangles. Our mobile bands are saying keep in the trade. Remember our buyers. This is what we're looking at this week. Will the buyers stand strong here at this support level? ADX is negative and strong as stochastics heads higher. And now we're going to go to the education portion of our video. We're using the book Trading a Zone by Mark Douglas. And we're on Chapter 5, Dynamics of Perception and Perception Learning. This is our last part of it here. And, we've all heard the expression, people see what they want to see. A lot of time we deal with that when we're talking about relationships and our friends. And, we try to tell them, oh, this person's wrong for you, but they just can't see it. And Mark goes on to say that it's not that as much as people only see what they've learned to see. And everything else is invisible to them because they haven't learned how to block the energy that is kind of skewing their view of what's right there in front of them, what's stopping them from learning what's waiting to be discovered. And like I said, a lot of times we talk about that with our friends, but at the same time, we've all been in a situation when one of our friends, a family members, has a fear of heights, of food, of animals, whatever, and when you look at them, you're like, what is wrong with this person? There's no threat here, there's no danger here. But you could also make that same comparison to trading. When you're hesitant, when you're nervous, when you're not freely trading, that opportunity, what would an experienced trader say about that? Would they call that irrational? Would they say that there's nothing to trade? The important thing about trading is that it's about opportunities. Remember, the market is just a stream of data. A price graph is just ticks of information. And it's our knowledge that puts meaning to that information. And more importantly, it's our trading plans that makes opportunities available to us. And we have to be able to see that each trade is a simple opportunity with a probable outcome. And if you want to get real geeky about it, there's statistics about how they're independent of each other. And more importantly, if you have a good trading system, our statistics show us that we're not going to win at every trade, but we're going to have a higher number of winning trades if your trading plan is set up properly. If you believe that your current trade is related to your last trade, and because you lost your last trade, this one's going to lose, that again is you putting emotions into your trading. It is you skewing your vision of trading because you're holding on to the past. And again, to go back to relationship, stereotypically, people say that, they treat their new partner that they're in a relationship based upon how other people treated them in the past. So, in the trading the same way. You can't take the current trade based upon what happened in the past. So as always, you can get the full version of our podcast by going to AccendoTrader.com, subscribe podcast.html. We're always looking for you people to sign up and become a full-fledged member. Prices have gone up here in 2009. Prices have gone up. because again, the value of our videos, we're not giving you a newsletter. We're giving you daily picks, not picks that we've been trading, but everyday new trades that we feel are safe to get into on a daily basis. Get our blog. We'll also be posting the free version there. Every Sunday we have our free version. And again, Twitter, more and more people are signing up, and we're continuing to put value into there. And again, we're building it up to our Accendo Traders 30-Day Challenge that we'll be using Twitter for in February. Thanks, guys, and I will see you next time.